Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Monday, March the 17th, 2008. And I would like to wish everybody a very happy St. Patrick's Day. The headlines out of Switzerland this morning read, dollar fell below 99 yen and the euro dollar hit new record high. That headline seemed to be a little misleading because actually the dollar yen fell below 99 and the euro dollar hit a record high after Bear Stearns said a worsening cash position forced the Wall Street firm to secure emergency financing. The news that the New York Federal Reserve and J.P. Chase were to provide funds for the fifth largest U.S. investment bank signals more credit turmoil to come and added to investors' fear that the economy is in for a long recession. The euro-yen dropped to 99.08. The euro dollar hit 156.88 on Friday, an all-time high, before easing back to 156.80. The dollar Swissy fell below parity for the first time ever, trading at 99.73 before easing to 99.79. Analysts are saying that the dollar is likely to remain on the ropes because the Fed may have to do much more to ease the market nerves, either by cutting interest rates even more aggressively or by taking additional measures to inject liquidity. In addition to providing funds to Bear Stearns, the Fed last week announced plans to lend $200 billion to primary dealers and accept various mortgage debts as collateral. U.S. economic data on Friday did not favor the dollar. The University of Michigan Consumer Sentiment Index fell to a fresh multi-year low. A separate report showed underlying inflation unchanged in February. The dollar was sharply lower in the Asian session as the Fed cut the discount rate 25 basis points to 3.25 in an emergency meeting over the weekend. This move by Chairman Bernanke is the first weekend action in 3 decades. The move was in part to alleviate the credit squeeze pressuring the U.S. economy, and it was also aimed to provide financial support for J.P. Morgan's $2 per share bid for Bear Stearns. The Fed's decision pushed the dollar to new lows, with the euro dollar spiking slightly above the psychological level of 159, and the dollar yen and dollar Swissy both sliding to 95.78 and 96.46 respectively. Looking forward at the week, there seems to be little to support the dollar's collapse except actual central bank intervention. Problems within the U.S. seem to be escalating, with economic indicators pointing at a full-blown recession, with the crisis of financial sectors still uncertain. The earnings of several large U.S. banks, including Goldman, Lehman's, and Morgan Stanley, will be released this week. Given the current bout of risk aversion and pressure on the equity markets, we could expect the yen and the Swissy to outperform and high yielders to underperform in the G10. This week, the markets will remain on red alert for a joint intervention in the U.S. dollar. Japanese MOF's Shinohara, responsible for intervention, has said that excessive foreign exchange moves are undesirable and would cooperate with central banks, but would not comment on the specifics. We could expect rhetoric and rumors to hit the markets hard and fast this week, especially from the Eurozone and Japan, the two countries that theoretically should be under the most pressure from the weak dollar. At these levels, we need to consider the possibility of a joint intervention. Given the Fed's unorthodox approach to monetary policy, there are considerable risks surrounding the Fed's meeting on Tuesday. The Fed officials have made plenty of noise about not being a pawn to market expectations, but their actions in recent months suggest the opposite. On Friday, the market was pricing in roughly a 70 basis points cut, but now we are pricing in approximately a 90 basis point cut. Given this shift, it seems the market is thinking that there is a very high probability that the Fed will go 100 basis points. This still leaves the market 25 to 50 basis points above where we believe the Fed will end by the fourth quarter 2008. From an interest rate differential perspective, We could therefore see the greenback weakening further. Canada released the results of its survey of Canadian manufacturing in the month of January this morning, showing that Canadian manufacturing sales increased more than expected after showing a notable decline in previous months. The dollar quickly pulled back after hitting a weekly high against the loonie today in the New York session. The dollar spiked higher in mid-morning action, reaching 99.80, before reversing course to fetch 99 just before the 10 a.m. Eastern Time. And President Bush is still saying that the U.S. financial institutions are strong. Canadian stocks tumbled in early dealings this morning as the sale of a once proud Wall Street institution, Bear Stearns, sparked fresh worries over credit market turmoil. The Fed took steps to bolster confidence in the financial system over the weekend, cutting its discount rates, but the markets were unimpressed with the move, taking it as a sign that the health of the world's biggest economy is rapidly deteriorating. The Aussie fell to 91.87 against the greenback, testing last Tuesday's three-week low. While financial stocks led the markets sharply lower in the early trading today, stocks have staged a substantial recovery attempt since then. The major averages have all moved well off their worst levels of the morning. That concludes our news for today. Thank you for viewing. We hope this has been beneficial to your trading and that you have a great trading week. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find information about our Traders Training Center and also a link to our Yahoo forum, also called Succeed in Forex. We hope you'll visit us there soon. So until tomorrow, happy pipping.